Good afternoon, everyone. This is Michael Venezia. I'm the head trader here at Tradeview Markets. This is my webcast for Friday, March 27th, and as always, thank you everybody for joining us. The last couple of webcasts have been a little bit more advanced or intricate, if you will, but I don't want anybody to get spooked for those novices. I would say within the next 10 to 14 days, if you haven't seen our website, tvmarkets.com, I will be doing webcasts, but I'll be doing them actually in the morning and the afternoon. So I'll be putting out a couple every day, and maybe these previous webcasts I've done will come to light a little bit with some live trading and some good examples. But this week I'm talking about stocks that move predicated upon either fundamental news or stocks that move on emotion. Sometimes stocks that move in emotion can pay a lot more because there's really no concrete news out there. A stock can kind of take a life of their own. But I'm going to use two examples today of stocks that within the past year, 6 months actually, that have had both fundamental news and went up for emotional reasons, if you will, and how they reacted completely different, conversely, to either that fundamental news or emotional trading. Let me get back. First of all, let me just explain. Fundamental news, what can that be? Just briefly, it could be a stock buyback. It could be earnings. This example I'm going to use in Whiting Petroleum is a stock announcing a secondary. And emotions can just be either a non-triggered event, as I'll use in this one of my stocks here, DGLY. It could be a Fed announcement and the futures go crazy, and for no reason they just go up and continue going up, whether it be short covering or whatever you have you. But these are two very good examples on how to trade a stock both emotionally and then based upon its fundamentals. And the first stock I'm going to use here is DGLY. Now, DGLY makes video cameras for police and for cops, bottom line. So as you can see here in the middle of August last year, this is when the Ferguson riots were going on, and this is a very big event, if you will, not to make light of it, in the U.S. So DGLY, Wall Street always has a tendency of profiting from something bad, and they happen to do this with DGLY. Now, as you can see here, the stock basically was trading 200,000 shares a day. So when the riots started hitting, the stock had a little pop that day. Now, granted, this is emotional. DGLY didn't say they were going to get any contracts. Nothing was going to happen. Maybe Wall Street just surmised that this is where they were going to go to, kind of like Taser did back in the early 2000s, and I stress everyone to take a look at that. But this is what DGLY did. Now, granted, the stock does trade a couple 100,000 shares a day. So within about 10 trading days, the stock, as you can see, went from $4 to almost $35. Now, this is an emotional situation. A stock going up sixfold, almost trading 20 million shares a day, so it's trading almost 100 times its normal volume. And this took on a life of its own without a stop, basically. So that's how you can say DGLY traded emotionally. But let me go back to 2 days ago, the 24th of March. You can see right here, the second bar right here, DGLY had earnings. Now, this is how a stock reacted to fundamental news. DGLY right here, you can go into the press release or read my article on Tradeview Forex, that they reported their first profit in 12 quarters. Now, for a stock that announced good numbers and good earnings, if you will, should have reacted like it did emotionally. Maybe investors or fund managers said, okay, this company has turned the corner, maybe there's some basis to it, so let's hop on board. But 2 days ago, the stock had earnings, basically went from 16 and closed at 14. Hardly a strong endorsement for a stock showing great fundamentals. And this is a good example how a stock emotionally went up sixfold with really no rhyme or reason, and actually corrected and basically gave back what it gained. But right here, we're going to talk about fundamentals. How could a company that reports a good quarter profit for the first time and has already had this type of move, so DGLY has this type of move in it. But this is strongly, this is not an endorsement for stock acting very well, and this is acting on fundamentals. I would think that the fundamentals would have brought the stock up to 34, and then emotionally, maybe people took some profits here, but As you can see, that's completely, by the way, let me digress. The fact that DGLY has a 3 million share float also exacerbates the move, so the thinner stocks happen to be more dramatic. But let me use another example of fundamental news versus emotion. Let me go to WLL, Whiting Petroleum, on the New York Stock Exchange. The stock was $100 less than a year ago, obviously has gone down with a steep correction in crude, has had its problems along the way. The point that I'm making here is DGLY on this day, this gap up, which was the 9th of March, had a rumor that they were putting, first of all, a rumor, and this is predicated upon my emotional action, if you will. They had a rumor that they were putting themselves up for sale. Statoil and ExxonMobil were considered to be buyers, whatever. So this is an emotional trade. The stock, WLL, opened up nice, $4 or $5, actually 12%. The high of the day was 40. The stock closed at $38. Now that's a reason how emotional news really has no foundation. So let me go back to here where the fundamental news played a more important part. 2 days ago, WLL was trading at 38. You can see the precipitous drop here, opening at 31 and actually closing at 30. Now this is fundamental news, how the stock got affected by the secondary. They priced 35 million shares at $30. Now, this also led analysts to believe that if they did the secondary and they're putting some of their assets for sale, that there's going to be a hangover and companies don't really have an interest any longer in taking it over. So this is the opposite of what DGLY did. A stock that should have popped on emotional news only went up 11% and actually basically corrected. So there was really no foundation to that. It may come to fruition going forward. But the point I'm trying to make here, and this is the opposite to DGLY, the fundamental news in WLL reacted dramatically with the stock doing 15 million shares, down 20% on the day. And, I don't know if it's going to recover. It probably has a hangover for a long time. But what I'm saying is emotional trades can sometimes be more profitable because they take a life on their own. And sometimes when the news is out, so to speak. So fundamentally, DGLY had earnings and barely reacted. Actually, it was up 11 or 12%. But from where the stock came, certainly muted. And on the opposite, WLL, on the rumor, really petered out, and on the fundamental news, corrected and broke every low predicated upon that emotional news of a potential buyout. So once again, I want everybody to keep these two stocks in mind because they will be in play again. But with that being said, it's up to the traders to disseminate what news is for real, what is emotional, whether it be the futures or any individual stock. So these are important examples of stocks going forward. Keep in mind they did have good price range, they had good volume, and they had good action. So these are stocks both you should be trading regardless, but certainly charts that take upon a life of their own, both fundamentally and emotionally. So with that being said, once again, thank you for everybody for joining us. Please keep doing your homework. Please, everybody, get familiar with tvmarkets.com going forward. I'm going to personally take over the stock pricing page. We have a lot of good things going forward I'm very excited about. So until then, thank you, everybody, for tuning in.